Hi, my name is Scott from Foolproof Bookkeeping, where we specialize in bookkeeping and financial statements for restaurants, bars, and the hospitality industry. In this video, I'm going to talk about why you might have a profit showing on your P&L, your income statement, but have a declining bank balance. There are several reasons that this could happen, and most of them are not cause for alarm, but definitely things that you want to be aware of so that you can control your cash flow, which, as you are well aware, I'm sure, is all important in every kind of business, but especially in restaurants, bars, and hospitality where cash comes in and out every single day. So when we look at our profit and loss or our income statement, we have to understand that it's only part of the picture. It's a very important part of the picture, but it's only the operating element of the company. It doesn't take into account things like loans or capital assets or other things of that nature. It doesn't take into account any kind of liabilities. So all it says is, here is our revenue. This top part, this is how much we sold. The next section down, you're probably familiar with, is your cost of goods. It's what you spent on food or beverage. Possibly labor gets thrown into this category. You have some gross profit. And then you've got some administrative costs, things like bank charges, things like merchant services fees, office expenses, that kind of thing. You have occupancy costs, things like rent or mortgage payments, utilities, insurance. You have operating costs, things like supplies, repairs and maintenance. If you have live entertainment, you might have cleaning costs involved in that, those kind of things. And you have all of your other payroll costs. So, here in Canada, we have the CPP and EI. You might have QPP if you're in Quebec. You've got WSIB or WCB, depending on what part of the country you're in, for worker safety insurance, that kind of thing, as well as payroll service fees. Depending on how you do payroll, there's always a fee associated with it, as well as the actual labor cost that goes into it. So, we can talk about labor another time. It's a whole separate thing. And if you look at our website, actually, you'll find probably a couple articles there on discussing various things around labor. And what we see when we're looking at this very abbreviated income statement here is that we've had 2 months of profitability. So we should be seeing the bank account go up during this time. And those are healthy profits based on the sales. And these are fictional numbers, so don't read too much into this. I just made some stuff up for the purposes of this presentation. So good profits, we should see the bank account going up, but obviously we're not seeing that. So when we take a look at the month 2 versus month 1 here on the very abbreviated balance sheet, this is where we find the rest of what's happened to our cash. So if you see the checking account has gone down by $8,000 in month 2, here's a few ways we can look at to find where that money went. On that inventory line, this $12,500 here versus the $10,500 in month 1, that's a $2,000 increase in inventory. That means we bought more stuff that's now sitting on the shelves and in the coolers and has not been served yet. So this is an example of where money would come out of your bank account and go into the balance sheet, but it will not appear anywhere here over on our profit and loss statement. There's no category here that will show an increase in inventory. This cost of goods only reflects the cost of items that have been sold, not the cost of items that are sitting on your shelves and in your coolers. So there's a couple grand. The next big category down here is the property, plant, and equipment. So these are fixed assets, capital assets, whatever you want to call them. It's the big stuff in your bar, restaurant, hospitality business. It's things like refrigerators and ovens. It's electrical and plumbing repairs. That goes under leasehold. It's if your POS could cost a few $1,000s, that would be sitting in here as well. So these are, again, things where money goes out of your bank account, but it does not show up on your profit and loss or income statement. It only shows up here on the balance sheet. And so in this case, we've got a $7,000 increase. We went from 107 in month 1 to 114 in month 2. So we've spent $7,000 on something big, maybe a couple of big things, maybe a small oven and a small fridge, maybe one larger oven, maybe some tables and chairs, whatever that is. Maybe a big plumbing repair had to happen. And the reason it doesn't show up over here on your income statement is because of the CRA. It's not allowed. So you might think that should be an operating expense. You need a fridge, you need an oven, you need tables and chairs to operate. The issue is that these are assets that you're buying that have a long life expectancy. You're going to be using them for several years, so we have to depreciate those. So for the CRA, you're only allowed to expense a certain amount of that cost of those things in any given year. So what will end up on your income statement over here, depending on how often you do them, is some depreciation expense, which is not represented here on my very brief version of an income statement. But it will only be a portion of what you spend. So that's $7,000. A lot of things in restaurants will be depreciated at a rate of 20% a year, but in the first year you only get a 50% rule, so it's a half the deduction. So what's going to happen here? You spent this $7,000, you're going to get a 20%, just for example, say 20% depreciation on it, but only 50% in the first year. So you're actually only going to get a $700 expense over here on your income statement. The $10,000 is going to drop by $700, but you spent $7,000. So that's coming out of your bank account. So this is a big area where I see confusion happening with some operators of, hey, we're profitable, but our bank account's going down. Often, if you've had a period of unprofitability, or if you're seasonal, or you've just come out of COVID, things like that, you haven't been spending money, and all of a sudden you've got money coming in, and you need to do some upgrades and repairs to get some new equipment. That money goes out. It does not appear on your income statement or balance or your profit and loss statement. It only sits on the balance sheet here. So that's why you have to look at the balance sheet as well and understand that you can still lose cash and you can still run out of cash even if you're profitable. A few other areas to look at if those are not the ones that are triggering it for you. Accounts payable here, you can see in our scenario, it's gone up by $3,000 versus the $6,000 in the previous month. So that's actually a product that you've purchased that you haven't paid for yet. So we should see that as an increase in the bank account in many ways. Now, if we look at our example, we've actually increased our inventory as well as our payables. So a good chunk of this is inventory as well. So it's a bit of an offset in the bank account, but anyway, this is an area that can affect your bank account. If this number, this 9,000 had gone down, say it was 3,000, well, again, that's money out of your bank account that's not appearing on your income statement. Gift card liabilities, this is a common one. So in this case, this $3,900 month 2 versus $2,400 a month 1 means we've sold more gift cards, $1,500 worth of gift cards more than we've redeemed. So we should see an increase in the bank account money going up. And again, this is not going to appear on your income statement, your profit and loss statement anywhere. We have a GST HST suspense account here. This is just for an example. If you owe money to the government, it'll be set up in a suspense account. It could be GST, HST, it could be corporate tax payable. If you're consistently profitable, you're supposed to make monthly tax payments to the government. You basically pay your tax ahead of time before you file. If you're an annual HST filer, you have to make quarterly remittances to them. So these are all tax scenarios where you're basically paying for tax, not exactly ahead of time, but before you file it anyway. And this appears only on the balance sheet. Again, there's no category over here. There will be one, at the end of the year for tax payable. It'll come down here near the bottom. But in terms of interim payments, it's only showing up on your balance sheet. So again, this is money coming out. So money coming out of your bank account that you're not seeing in that profit line. And the last one I'm going to highlight here is this note payable, any kind of loans that you have. So the interest portion that you pay on a loan will show up over here on your profit and loss, your income statement, and it'll be probably under admin. That's, interest expenses usually end up in a category like this. But the principal that you're paying down is only sitting on the balance sheet. So you say you have $3,000 come out of your bank account for a loan payment. Half of it is interest, half of it is principal. Only the half that's interest shows up on that profit line. The other half shows up on the balance sheet. Money's still coming out of the bank account. Now, I know if you've got a keen eye on this, you'll see that my numbers down the side add up to 8,000. They should actually add up to 18,000 because we had a $10,000 profit here, and the bank account gone down by $8,000. And I kind of noticed that halfway through making this video and thought, well, let's just run with it and see how many people notice. So there was a little Easter egg, but I didn't want a bunch of weird comments saying that I don't know what I'm doing. These are all made up numbers. I'm trying to highlight categories for you to look at if your bank account is going down while you're still profitable. We've been there. We've done this. Our company specializes in restaurants, bars, and hospitality because that's the business that we know. I'm personally a Red Seal chef as well before I got into the accounting side. So if you have any questions at all or concerns, or you're not sure what's going on, you want somebody to take a look at your financials and give you a little bit of feedback, please give us a call. We're here to help, and look forward to hearing from you. And I hope that this has been useful in some way.